Welcome. I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and Vince Stefano, where we're here to provide you insights about the markets, tax planning, and financial planning in general. Today is May 1st. I can't believe we're already in May, but we've actually had a pretty decent start of the year, or start of May. And yesterday we had some of the tech companies came out with some positive earnings after hours. And today we have some other of those tech companies should be reporting. So as of yesterday's close, which was March 30th, the Dow Jones for the year was down about 4.41%. The NASDAQ was down about 9.65. The S&P 500 was down about 5.31. However, today the markets are up. So a lot of those indexes are up 1 to 2%. We'll see what happens between now and the end of the day.
Well, and that's because of the technology stocks,
Yep.
which Vince Stefano correctly predicted. I know that's unusual, but you got it right this time.
You know, like a broken watch, baby, like a broken watch. No, but it's funny because Catherine and I were talking yesterday when you were, I don't know where you were, but
I was playing golf.
Oh, you're playing golf? Well, I hope.
No.
Okay. Well, we were talking about the market.
Yeah, we're like, it was down.
And how it sold off so aggressively in the morning because the GDP number came in.
Yep.
And I think you may have that.
I do.
I
It
forgot
came
what that.
in yesterday. It came in at negative 0.3%.
And that's the gross domestic product.
Yes, and we were expecting, I think the economists were expecting it to be positive. So there was definitely a little bit of a slowdown based on the numbers. I think that obviously affected the market early on.
Yeah, it did early on. And then Catherine comes walking in my office. I don't know, must have been about 11:30, and said, "Hey, what's going on? The market's..." And it started to move a little bit because by mid-morning, there were rumors began to spread about a trade deal with India and a possible minerals deal between the U.S. and Ukraine. Well, when that started happening and started hitting the tapes, the market put in a very stiff rally and finished up pretty nicely for the day. So, again, we've been saying all along in these podcasts, there's so much negative commentary in the market from the mainstream legacy media. So people, they listen to it and they may act accordingly. And we keep saying, don't do that. The markets fluctuate, stocks fluctuate, and as I keep telling my clients, you can't exit the markets completely. So you can't let fear and political bias get in the way of your investment decision making. And I'm going to say it again. Look for high-quality, dominant, rapidly growing companies. And again, where are these found? Mostly in technology companies.
It feels like 2024. Last year, we just had a phenomenal year with.
What's led the market up? I'll give it to you that led the market down. Yeah, tech stocks did lead the market, but they got incredibly overbought at one time. And now their valuations are much cheaper than they were 6 to 9 months ago.
But remember, some of the business that they're getting is kind of, I don't know what you call it, forward loading, because people are afraid of tariffs. So some of the orders are coming in are more than would normally be there.
No, that's true. And that does happen. And I'm not going to say that's not part of it. But you need to continue looking over a market cycle and buy the most highly innovative companies out there. And what you're going to find with those big companies is that they have a huge high barrier to entry. It's very difficult to be challenged on a lot of their technology or their services or products. And more importantly, these companies have what I call really the big four. They have earnings, revenue, operating margins, and free cash growth. And that's what you want to see in companies going forward. And as Catherine mentioned earlier about tech companies, it's always about the Magnificent Seven. Mm-hmm. Well, so far, 5 of the Magnificent Seven have reported earnings, and they've done extremely well. We've got 2 more tonight. I don't know if I can mention them or not, but I will. Apple and Amazon tonight. I'm not saying to buy or sell those, but again, these companies have moved the market from where it was down almost, 20% on the NASDAQ? Now it's only down, 9?
Mm-hmm. And then today it's up.
And today it's up
a couple
again.
percent.
Yeah. So you're seeing these, and I've said all along, when investors come back, they come back to the best companies in the market.
I think this is a good time, though, to do some introspection. Because if you were just freaking out because of what just happened, then maybe you should lower your percentage of stocks in the portfolio. You know, we're not necessarily, that may be the best thing, but it could be the best thing for you, because now you get a real taste of what your real risk tolerance is when markets go down like this. You know, and I know, we hear, well, Trump's president and he's never been anything like that, but it's always something, whether it's Trump or whether it's terrorism or whether it's, whatever, the COVID thing, it's always something. And people react in a certain way. And if you have found that over the last, especially if you've been invested for a while, over the last 2 or 3 times when the market's been hit, that you just get too nervous, then maybe that's not where you should be.
Yeah, and it's interesting because in this last week, I know we report weekly, the markets have moved 2, 3, 4%, and that's not even including today. So here we are. And the markets have come back a little bit. It seems like a little more calm than it was a few weeks ago. But if you try and time this, you can't time it. But it is important to revisit, what's a good allocation? Are you in the right appropriate allocation based on your risk and your comfort level with the market volatility? And I think it is important to continue to look at that.
Yeah, and actually I think we're up more than that from the bottom.
Yes, that's just from last week.
Right. So there were a lot of people at the bottom who were just thinking, I want to get out.
Yeah.
And again, if that's your thought, now is the time that you should be thinking about it. The market's back up a lot, maybe not quite as much as it was, 5 or 6 months ago, but it's still up a lot. And if you're thinking, I just can't go through this again, then maybe it's time to call us and say, maybe we should revisit my plan because I'm not sure I can handle this. And we want, look, we want to do what's best for our clients, but within their risk tolerance. Because when it's beyond your risk tolerance, you start making mistakes when things go bad.
It's interesting. I had a call with a client yesterday just to check in and see how she was doing. And we went over her portfolio, and she didn't realize, she was pretty much flat for the year. And in her mind, she was thinking that she was down. I said, we're working your plan. We have a plan in place. This is where you're at. And so it was interesting because everybody is different with their allocation of how they're invested. And when you see the headlines, you're thinking doom and gloom and the world's going to end. And but the reality is, everybody's situation might be a little different. And once again, we are looking at that for each client and what's appropriate for them.
Right. Well, we're still not out of the woods yet. I mean, we don't know what's going to happen. Yeah. If Trump says one thing that's good, the market goes up. If he says nothing that's bad, it goes down. So you just got to be careful with watching the news, to be honest with you. Yeah. But having said that, though, it looks like the economy is slowing. All right, and it's slowing partly because people aren't sure what to do. So I understand from the news media that we may be coming up with an agreement with India. Which would be good if you can get one agreement out there, so at least we can see what this looks like. And I think once they start coming up with some agreements, I think people will stop worrying as much about tariffs. But if all you're doing is watching the news, remember, they have a business too. Their business is to get you to watch or to listen. And what gets you to watch or listen more than scare tactics? I mean, whether it's the economy or something else, murders here or, robberies there. I mean, that's all you hear in the news. You don't really hear so much the good stuff.
Well, I think you're right about the tariffs. And, if they do sign a deal with India over the next, week, 2 weeks, I think that's going to provide a template for the other 18 to 20 deals that supposedly are on the table, and it could lead to more. And so, again, it's like, okay, the market's been rallying very heavily on news where there could be some tariff relief. So, again, I caution everybody to be very careful as to how they position their portfolio. And again, don't let political bias get in the way of good investing.
Right, and that goes both sides, both ways.
No, it does.
We had the same issue when Biden was in office, and half of our people are conservative, the other half are not, and the people who are conservative all wanted to get out of the market. I mean, we had to do the same kind of talking to them as we do to our a little bit more liberal clients now.
And good companies will always find a way to do well under any administration.
Well, eventually you adapt. You adapt
They
to,
adapt,
to
yeah.
what happens. But having said that, if we lose our access to China, that will have a significant impact on our economy.
I'm going to go on the limb and say they're going to come to a deal because China needs us a whole lot. We buy a lot of their goods, and the last thing Xi wants to see is 25 or 30 million people out of a job storming Tiananmen Square.
Right. The difference, though, is that they don't have to worry about getting voted in by
That's
the people.
true. That's true.
So, sometimes most of the time, I think that the leaders of those communist countries, they don't care. I mean, look at Cuba, look at North Korea, and look at China, really, to tell you the truth. They will do things that you can't do in a democratic country. So how long can we hold out when half of the political spectrum is calling for you to be tarred and feathered, whereas if you did that in China, you would be the one that would be tarred and feathered. So it's a different situation. But you're right. They need us too. And as a matter of fact, I understand that their economy is slowing a lot.
Yeah, it is.
So it's interesting. I was looking at the IFA, which is the kind of European, Australia, Asia, and the Far East. And there's 21 developed markets that are part of this index. And so I was kind of looking because obviously we look at different sectors to see, and this isn't something I usually report on. But year to date, and this is as of April 30th, the year-to-date return was 12.09% in the positive. So it's interesting because then I look back to say, okay, well, over the last 20 years, how has international done? From 2005 through the end of December of 2024, the international or the IFA index annualized about 4.81%, which is pretty much has lagged the U.S. market. But now, this year to date, that sector, at least as of now, has held up pretty strongly with this market.
Well, there's a reason for that too. Number one, I think that we were a little bit overvalued, and Europe and some of those others have really not done anything, as you just said, in the last however many years.
20 years.
So the valuations there are better. The difference, though, is I think with a lot of the U.S. stocks, or with many of them anyway, I think there's more innovation. There's more growth potential. But in short periods of time, I think you're going to see, the internationals beat the U.S. It just hasn't happened in a while.
That's surprising. You
I
said
know.
4%. I mean,
The
I was
4.8,
surprised on that because that's like a T-bill.
Yeah. So it was just kind of interesting.
Speaking of T-bill, where is the rates these days?
So right now we're looking at our 1-year CDs are 4.05%, and our T-bills are actually
Treasury bills.
Treasury bills are 3.875 for 1 year. So usually the CDs rates and the T-bills are pretty comparable, but right now it looks like T-bills or Treasuries are lagging right now from some of the CD rates. And then it does look like the odds for a rate cut is 10% chance for next week, which obviously we don't expect. And then the odds for a rate cut in June, we're looking at about 65%. So we'll see what happens between now and then with rates.
Well, if the Fed believes that things are slowing down, and it really does look like it, they really shouldn't wait to say, I'm going to make absolutely sure of every number. And I think we talked about this last week, just because by then it will be too late. So if you want to cut rates because you think things are slowing, now's the time to do it.
Well, I can tell you this. Start looking at the next big thing coming down the pipe, and that's the reconciliation bill with taxes and business regulations being reduced. And I'm going to turn this over to my colleague, Rachel, and have her say, what do you think is going to happen?
Anything could
You're
happen
my
at
tax
this point.
You're my
Anything
tax
could happen
expert.
at this
You're a
point.
tax expert, so.
In the accounting community, we really wait until it's law because you can go down so many rabbit holes and rabbit trails and try to figure out what they're going to do. It's hard to say what they're going to do.
But as a tax specialist, do you think keeping the rates where they are is a good thing?
I think so. Going back up to the 39.6 as the highest rate, I don't
good.
think that's great.
Ain't good.
Nope, not great.
All right.
I think there are a lot of things that they can do. I think the SALT cap, the state and local tax, they need to either eliminate it or raise it.
Want to explain what that is real quick?
So previously, if you itemized your deductions when you filed your taxes, you could deduct mortgage interest, property taxes, state and local taxes. And it was basically that state and local tax deduction was unlimited. So it didn't matter how much you paid in property taxes, you could write off all of it. Back in 2017, with the Tax Cuts and Jobs Act that they passed, they basically put a cap on it and said, okay, as of now, you can only write off $10,000 annually. And it really is a marriage penalty for couples, because if you're single and let's just say that you have a significant other and you're each filing, single taxes, you each get that $10,000, and then you get married, and then it goes from $20,000 to $10,000. So at least there should be relief from that, because I think that's a marriage penalty. People who file jointly should each get the $10,000, because if you file married filing separately, you only get $5,000. So they accounted for it there if you file married separate, but if you joint, you're the same as somebody who's single. So I think they should change that.
Most other countries don't have anything like this, do they? Do you know?
I only know a few things about Canadian taxation, and I do know in Canada you can't write off mortgage interest, and so I only found that out because my mom lived up there. But different countries have different tax systems, and I unfortunately am not an expert in those, but you can ask me.
I had heard too about Canada, and when they didn't have the real estate issue that we had too.
Correct.
So, the government is subsidizing people for buying their homes. That's really what it is.
Absolutely. Yes. I think they're the pretty big real estate lobby. But one of the things that I wanted to talk about today is, and we talked a little bit about people's risk tolerance, and one of the things I saw a lot this season were people's Social Security numbers were being used on other tax returns. So there's a lot of identity theft. And so one of the things that the IRS is really harping on and is saying, if you haven't done so already, log on to the irs.gov website and create an account, an online account, because they are trying to get themselves out into the modern world and actually have tools online for taxpayers where you can create an IP PIN or identity protection PIN. You get a new one every single year, and they're really urging taxpayers to do this so that people aren't using your Social Security number on W-4s and for jobs and so on and so forth. But also when you file your taxes, your information's secure. So irs.gov, you log on, you can create an online account, and then you can apply for an ID PIN.
This is instead of getting everything by mail.
Correct. Yes. And one of the nice things about this is you can log in and make payments. They have said that starting in September, you'll have to make any payments to the IRS electronically. So this will enable you to already be ahead of what's coming later in the year.
And of course, it was interesting. I got a refund from the state, and with that, there was a note that said, if you file your taxes electronically, you won't have to get the paper. And I'm thinking, I did file it electronically, and they still sent me paper.
Can't win.
No, that's the government.
That's the government. Yeah,
here to help.
So inefficient.
Yeah, they're here to help you. Do they send you if you're going to get audited? Do they send it over that little website?
The link. Yes. So any notices instead of.
So you don't get the letter?
You don't get the letter anymore. You have to log into your account and check to see it. Well, I think
you get a notice.
I think you may get a notice, but if you check the box that says you can also log in and see all your notices and download other information.
But
as
you
well.
will get something on your email that says there's a message.
There's something
for you.
waiting for you.
God, it doesn't go to spam. You'll be sitting there getting a lot of interest penalties.
No guarantees on that. So. What else do you have for tax? Anything?
Tax season's over. I'm glad the season's over.
Yeah, you look like you're a little more rested.
I'm still pretty tired, but yesterday was payroll deadline. There's a deadline every month.
So you're never really done?
No, never done. But death and taxes.
Okay, well, so far it's a good day in the market. Of course, who knows?
I think we've been in here for half hour? You never know what's going to happen.
Exactly. You never know what's going to happen. One thing I do know that's going to happen, though, unless the world comes to an end, we're going to be here next week. So thanks again for listening, and we'll see you then.
Thank you.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.